Folks, the market collapse is happening at a very rapid clip right now. It's accelerating. We get some incredible things going on. TLT, we're going to start off right at the bat here talking about TLT. Another massive move down for TLT. Bonds can't find a bottom anywhere in sight. Treasuries keep spiking. We have certain things going on in the political field in the U.S. government right now that we've never seen in history. Literally in history going on right now. We're going to speak about what that means for the market overall. A lot of stocks to talk about in today's video. A lot of things in the market. It's an action-packed video. Obviously, a really rough day for a ton of stocks out there. Appreciate everybody joining me. Thank you for being subscribed, folks. We have a lot to get into, and I'm also going to tell you how I'm approaching this market kind of moving forward now at this point in time, okay? TLT, right off the bat. I understand a lot of people have been trying to find a bottom and trying to find a bottom and trying to bottom pick in regards to TLT, and it's just showing no signs of a bottom. This baby hit 85 today, 85 for TLT. And, I mean, at the end of the day, like at some point TLT will bottom and will start going up, but it just doesn't seem like it's anytime soon. It's just in complete free fall. Like that is the definition of complete free fall. That chart I got up for you right there, right? The bonds in general, if we look at treasuries, right? 2-year treasuries are up today. 3-year treasuries are up today. 5-year treasuries are up today. 7-year treasuries are up today. 10-year and 30-year treasuries were all up today. What does that tell you about the market? If I tell you all those treasuries are going to be up, what does that mean? That means stock's down. As simple as that right now in this market, right? The view is, oh my gosh, rates are going to go potentially even higher, and we're going to be in a situation where the devastation would be even worse on the other side of that whenever that happens, right? That's at least a view. Doesn't mean it's going to happen for sure, by the way, but that's just the viewpoint now at this point in time. And also, like, at the end of the day, like if rates keep going up, well, guess what that means? That means likely savings accounts are going to yield higher. That means there's more competition for your money, which means people are more likely to put in their money to a 2-year treasury, right? Versus go put their money in the market. So this is the dynamic we have going on that is severely hurting stocks at this point in time, right? Look at this. Oh my gosh. Mortgage rates are getting close to 8%, hitting a high not seen since late 2000. 2000, I was still in elementary school. I think in 2001, I went to middle school, okay? This is insane, right? Mortgage rates now up to 7.72%. And we've basically been in an economic system for many years that got everybody used to, you know, let's call it 2 to 5% mortgages. When all of a sudden you start talking about 8%, like it's impossible. It basically means that the housing market is going to be frozen cold this winter. And I mean, if you know, you can make an argument that it already is frozen cold in terms of the housing market, it's going to go next level cold this winter, folks. The fall time is going to be a horrible fall, maybe the worst fall in history for home sales is what we're going to be facing this fall. In the winter, I think it could be honestly the worst winter for home sales we've ever seen. We'll see what happens. We'll see what changes in rates and everything like that. But I'm just telling you, it's looking like a disaster for the fall and this winter. I mean, if housing wasn't bad enough, this is just adding insult to injury. And you still got sellers who still want their prices and still are not lowering prices really the way they should be. I think after this winter, I think people are going to have to get very realistic about pricing, and I think we're going to have to see prices come down. Either mortgage rates have to come down or prices have to come down. And all this is creating like a boa constrictor, right? Where it just kind of wraps you tighter and tighter and you can't breathe anymore. And that's what I feel like the treasury market's doing right now. That's what I feel like is going on in the bond market. It's basically kind of like suffocating the stock market itself right now and companies and the economy. And it's just like every time you try to wiggle out, it just seems like it's tighter. It's almost like, what do they call it? Quicksand, right? Quicksand, you try to move around and it just creates a worse dynamic and you just go deeper and deeper. And so you get some good economic data. But at the end of the day, if you get good economic data that comes out, let's say a good jobs report or whatever, what does that send? Treasuries higher, right? It puts even more like, oh boy, was the Fed going to have to go higher? Is inflation going to be a problem even into 2024, right? And it creates this just suffocating dynamic of like just getting squeezed relentlessly. And this is what we have going on now at this point in time, right? The equal weight S&P 500 just went negative on the year now at this point in time, down about 2%. So all the gains have been lost in the equal weight index, and now that baby is Red Dead Redemption. The Russell has lost all its gains for the year. That is now negative for the year as well, right? All those gains wiped completely out from both those indexes. If we look at the Dow's, I think the Dow's about to go negative, to be honest. Dow loses more than 400 points, goes negative for 2023. Yeah, folks, Dow is now negative, is negative for the year. S&P 500. S&P 500 falls a few more percent, then that's negative. NASDAQ still has quite a ways to fall. If that baby goes negative, NASDAQ goes negative for the year. That means we had a disastrous type obliteration type crash over this next several weeks if the NASDAQ goes negative, because that one's still very nicely in the green. But this is a dynamic we have going on right now, and these indexes just aren't finding any help. And where's the money? Where's the buying pressure right now? The buying pressure is non-existent. Why is the buying pressure non-existent? Well, because treasuries keep going higher. And so money just kind of, if there is any money out there, it goes over there, right? And you're always going to have a certain amount of selling pressure. And then when you have certain folks that, think about this for a moment, okay? Think about this, let this sink in. If you're in a dynamic where people, or let's say Wall Streeters, are looking at treasuries or high net worth individuals or whoever, right? They're looking at treasuries yielding 5% plus, and they say, I can get this for the next year or two. There's a lot of uncertainty over this next year or two. I don't really know if I want to be in this market. It creates a selling dynamic. But the problem is if you have too many sellers and not enough buyers, right, price has to come down. And so that's a bad dynamic we have going on right now. And it just doesn't seem like there's enough buying pressure on the other side. And that's something we certainly went through last year in a vicious way, right? If we look at big tech today, even big tech starting to get hit. It was one thing we saw a lot of these, let's call them more staple companies that are supposed to be so safe, getting hit. With all the dividend stocks getting hit, well, we're out of that now. And now we're not out of that in terms of those stocks aren't done going down, but in terms of like, it's not just those stocks, big tech starting to fall. Shopify was down nearly 5% here today. Amazon, a huge downward move, 3.66% for Amazon. That's massive, man. AMD was down over 3% here today. NVIDIA was down close to 3%. Adobe was down 2.7%. And Mr. Softy is down 2.6% here today. Big tech's starting to feel a little bit of the heat. It feels like we can't really bottom out this market until big tech gets hit quite a bit harder, though. I would love to see the NASDAQ lose its gains for the year. I don't know if that's going to happen, but I would love to see that happen because I can tell you, woo, baby, are we looking at a platter. Dollar Tree, I've been keeping track of this one for you guys. It's really flirting with going into the 90s and under $100. And this is a stock that now is down again today. It's down almost every single trading day. It doesn't matter what goes on in the market. It seems like it's down almost every single day. It's now down 29% year to date for a quote unquote safety stock, folks. A safety stock is anything but safe. My gosh. JM Smuckers, another one I've been keeping track for you guys, now just hit down nearly 26% this year. Jam and Jelly, what are we doing here? Stock down almost another 1% here today. Disney is shocking. Absolutely shocking, folks. Disney's now under $80. It's $79 a share at this point in time. $79. It dropped another 2.6% here today. Folks, if you back Disney stock up to 2013, go back to October of 2013, okay? The stock's only a little higher than it was way back in October of 2013, a decade ago, folks. A decade ago. That's where we're back to on Disney pricing, to where we were basically 10 years ago. So if you think there's any progress this company has made over the last decade, it has all been completely wiped out in regards to stock price now at this point in time. Absolutely incredible, okay? I mean, the problem with Disney, okay, and I keep looking at Disney stock, and it's tempting me, okay? And it's making me mad because I really don't want to, make a big position in this one, but damn it, it's tempting me, man. Like, I'm looking at it and I'm like, it's down to $79 now. We're at, a 10-year low roughly, or around where the stock was 10 years ago. Oh gosh, man, that's a problem in this market. You start getting all these stocks thrown at you for this price and this price from this price, and that's the one problem with a falling market is like, well, do I buy Disney or would I rather buy another stock that maybe hasn't been hit as hard, but let's say I like the company a lot better for the long term, right? So, and these debt-laden companies are getting just hammered right now. And Disney, don't forget, this company has a lot of debt. That's what keeps me away from Disney, the debt. I'll be honest, the debt is really what does it for me. Now, 3M, folks, this is way more shocking than even Disney. This stock is lower today than it was in July of 2007. I was still in high school in 2007. That was what, my senior year, going into my senior year. How ridiculous is that to think, folks? That's what we're dealing with in this sort of market, folks. And when I say there's stocks at 10-year lows, 15-year lows, 20-year lows, this is what I'm talking about. And when I say these stocks, right, these are historically seen as safety companies, seen as the best of the best business models. They're seen as like, oh man, this is just an easy stock for me to own. And yet these stocks are still at 10, 15-year lows. And you've got to ask yourself, what does that tell you about the state of the market? That tells me we're in a stock market that is very similar to the great financial crisis. But yet the indexes don't tell you that. Because the indexes, you got to understand, the indexes in the great financial crisis all fell like 50% plus. But the thing was, in that crash, if you go back and you look to where stocks fell, they basically fell to where they were like 5, 10, 15 years before that. Okay? The same exact phenomenon's happening right now. It's just the indexes don't tell you the story of that happening. And that's the weirdest part of this. And this goes into the weighting of the stock market and how things are done. And the biggest big cap companies have been holding up better than the weaker companies. But I'm just telling you guys, okay? And remember, these stocks like Disney and 3M and jam and jelly companies and all these companies, these are usually seen as the strongest of strong companies. These are the sorts of stocks that are usually seen as the strongest. So it's not like these are some, stocks that are seen as crap stocks. These are usually seen as the safest. And yet these stocks are being hammered like this to 10, 15 plus year lows. Over a 15-year low. 3M's at. Holy smokers, that's no joke. Because by the way, they're dealing with a bunch of legal battles. I'm sure a lot of that will alleviate in 24 and 25, but it's incredible, folks. Absolutely incredible. I pulled up the Dow 30, and I want to see the worst stocks today in the Dow 30. It was fascinating to me because there's 3 of the most high-quality stocks in the Dow 30 were actually the weakest ones today. Goldman Sachs, which has gone through just about every financial situation you could ever imagine, high inflation, low inflation, recessions, like everything, right? Goldman Sachs down. That was a worst stock in the whole bunch today, right? American Express was down 3% here today. Home Depot was down 2.6%. That was the worst stocks in the Dow, right? Look at ARK Invest. ARK Invest, folks, is starting to get hit again. It is down 2.7% here today, and it's back down to $37. Tesla's holding this baby up right now, folks. If we were to see Tesla get hit hard, I'm just telling you, next thing you know, ARK's going to be back down to pricing it was back in 2022, which it's already getting pretty close to those ranges now at this point in time, which is crazy because ARK had been having a tremendous time. Like it seemed like just yesterday, wasn't ARK 50 plus? And now we're looking at this baby back at 37. If we're talking about going under 35, all it takes is Tesla to get hit. Let's say Tesla got hit, and let's say it went to $100 something. Let's say it goes to 190, 180. It doesn't even have to go to 101, which is where it was at actually last year. Boom, next thing you know, ARK's back down to somewhere near those 2022 lows for ARK Invest, right? Just when it seemed like it was better from here. These stocks, folks, I call this a slaughterhouse. This is a slaughterhouse of stocks. FinTech. It's the slaughterhouse right now. Affirm was down double-digit percentage today, over 10% down for Affirm. SoFi can't afford a sofa right now. They are down over 7% here today. It's flirting with going back into the 6s. Oh, man, that's brutal. Rocket down to $7.48 now at this point in time. Upstart's getting hit heavy. That was a 5% downward move. Coin down nearly 4%. Square, folks, Square. I can't even believe this one. It might hit the 30s. Square might hit the 30s, folks. It closed at $41.90 today. All it would take is what? 2 more days of weakness in the market and Square's in the 30s. That's crazy, man. PayPal got hit today, but it's holding decent compared to the other fintechs. It was only down 2%. It's holding that 57 range right now. And then Hood's well into the, under $10 range now at this point in time. Brutal. Absolutely brutal, folks, okay? 5 stocks I'm hedged against. It was a great day for my hedges, certainly. Polaris was up over 3% here today. Down over 3%, which means I was up a lot more than 3%, right? Apple was down here today, but that one's still not getting hit that hard. I really want to see Apple go down like 155 or so over this next month. That would be ideal. And, we don't really know what's going on with iPhones. Some people are saying it's strong. Some people are saying it's not. We don't really know, okay? Toll Brothers got hit hard today, about 3.7% down for Toll Brothers. Chipotle got hit today. That's one of my hedges. And then SDAO was up huge. Look at kind of the difference in SDAO here today, right? SDAO on that big day, it was up 27%. My call option, these call options on SDAO were up 27% here today, folks. 27% in a day. It's incredible. And so you got to keep in mind, like I say, a little hedging done the right way can go a long way. Now, my hope is the market tanks for at least the next few weeks. I wouldn't mind tanking into the end of the year. And if that were to happen, and Wall Street kept selling off this baby and the algorithms keep selling off this baby, my SDAO should print money and I should be able to cash out of this maybe at some point and then roll those into some sort of hedges. I probably won't do SDAO again next year. The SDAO setup was just great going into this year because it was not hit very hard last year versus the NASDAQ. Like if I would have, a lot of people are saying, oh, you should hedge against the Qs, do SQQQQ instead of SDAO, right? Here's the deal. If I did that, all of my SQQQs would all be worth $0 today. $0 because the NASDAQ's had such a great year. So I at least gave myself a fighting chance by going SDAO versus the Qs. So thank you for that. A lot of people try to talk me into that, and I just, stuck with my guns on that one. And we'll see what happens here, right? And I might get, this is like getting your cake and eating it too situation because it's been such a ridiculously great year for me in the market. And then if I can get out of these SDAOs for a profit, oh my gosh, like that would be beyond perfect. I don't want to get too excited about that. We'll see what happens, but my gosh, would that be a perfect scenario. Look at the Polaris put options here today, right? I bought these less than a month ago. Less than a month ago. They were up 13% here today, up 23% in less than a month on these ones, right? Polaris, I'm not so bullish about their numbers in 2024. I'll put it that way. With interest rates where they're at, and then if you have fears of the economy on top of that, Polaris going a lot lower if those sorts of things play out, right? Toll Brothers, no faith in Toll Brothers, and my put options are printing money. These are baby options too. I haven't even had these for very long. We're already up 40% on my Toll Brother options. They're printing money right now. It was over a 10% move here today. $840 up on Toll Brother options here today. And here's the best part, okay? Like, look at Toll Brother stock. It hasn't even really been hit yet. It's been hit a little baby amount. The stock is still like almost the highest it's ever been outside of very recently in its history, right? It's been an incredible time for Toll Brothers. I'm telling you, home sales are going to freeze. They're going to absolutely freeze this winter. It's going to be awful. Toll Brother numbers for the future quarter, the fall time quarter, and the winter quarter are going to be a freaking disaster. Absolute disaster. And so in terms of new orders coming in, obviously they're going to still be banking money. But the other worry for Toll Brothers and the home builders are, with these mortgage rates keep going up, what happens if some people start to cancel? It doesn't have to be a lot, right? It's just a little amount bigger. All of a sudden you start taking hits to profitability. All of a sudden you're stuck in a situation where you're like, okay, do we sell this house at a discount now? Do we try to sell it at full price and potentially have to sit on it for quite a while? These are questions you have to, ask. And that's a difficult situation. So Toll Brothers, yeah, I'm definitely kind of liking where I'm positioned there, right? Now, there's a great point a gentleman made here today, right? And he brought up tax loss harvesting. I'm like, dang, this year has gone pretty fast. We're already in October. Now, what this means, folks, okay, is keep in mind, all these stocks that have been absolutely devastated, all these value stocks, dividend stocks, a lot of these I've been bringing up to your attention, right? These babies could keep selling off into year end. And I know a lot of people are expecting a Santa Claus rally at some point, a rally in November, December. And I mean, that's always a potential for the market. I wouldn't, necessarily bank on that. I know a lot of people are banking on that. I wouldn't bank on it. It's definitely potentially. A lot of times you get the Santa Claus rally kind of November, December. But there's a potential we could have a sell-off into year end if we keep getting bad news, if rates keep going higher and those sorts of things. Now, if that happens, right, you're going to continue to see selling pressure on the dividend value stocks, not just because the market's going down, but because of tax loss harvesting. And basically, a lot of people have made a lot of money on, especially the Metas and the Teslas and stocks like that, right? So imagine a lot of people trade the market. So imagine you made a bunch of money. Okay, you made $50 million on Meta stock. You're a big fund, right? Boom, you cashed out your profits. Great for you. Oh, now you got a big tax hit there, right? But there you go. You got this dividend stock. You lost 10 million on over here. You got this dividend stock. You're down 15 million on. You got this dividend stock over here, value stock. You're down 20 million on. Boom, you can kind of sell out of those shares, right? And go ahead and write those off against your gains. And that can happen on a large scale, right? It's way more than just a few hedge funds. All of a sudden, it's a lot of higher net worth individuals. It's retail investors. It's all sorts of folks, right? And so I wouldn't be surprised if a lot of these value and dividend stocks see continued selling pressure here for a bit of time. And then they should bottom out. Eventually they should bottom out, and then we can kind of have a fun time, right? So the way I'm kind of playing this and how I'm thinking about this, right, is I need to continue to buy these dividend stocks and these value stocks heavy in Q4 and Q1. I know I'm never going to be able to perfectly time the bottom to get, these shares at the perfect bottom, right? But my feeling is if I buy heavy over this next couple quarters, this quarter we're in right now and next quarter as well, right? What I believe is going to play out is I believe in Q2 and Q3, I believe early Wall Street money will start to come into a lot of those dividend stocks, because by that time, I think the belief is going to be, okay, rates are probably going to go lower by the end of 24 or at 25 at some point in time. So which means the early Wall Street crowd is going to likely start getting into a lot of those stocks, right? And maybe some of them that sold off those stocks, by that time you already be past the 90 days, so you'll be able to buy back your shares, right? So that's what I see playing out. And then by Q4 2024 and into 2025, I think the masses will pile back into dividend stocks again, because I just don't think, my belief is, I don't think rates are going to be able to stay as high as a lot of people are expecting for as long as people are expecting. I think there's going to be problems that come before that, okay? And so I got to beat everybody to the punch on this, right? I'm just a little guy in his house trying to make some videos here and trying to buy stocks, right? I've got to beat everybody to the punch. I've got to be more agile than Wall Street. And so this is my name of the game. I got to beat them to where the puck is going, essentially, right? I got to outrace them. And so it reminds me of, I used to run track, and the best event for me was the 200 meter, right? But in track, you don't get to do a false start. You don't get to, switch lanes. In Wall Street and in the stock market, it's the best scenario ever. Because imagine we're lined up for this race here. I get to start before the race even starts. And I get to drop lanes, so instead of staying in my lane the whole time, I'm going to get to go all the way down to lane 1 to get another advantage on these guys, right? So that's the beautiful thing, is I'm going to be able to beat them to the punch. And this is something I did, very famously last year, right? In regards to Meta stock, I beat them to the punch on Meta. I knew they were going to come back to Meta. Like, come on. Meta's a great company. Like, you're not going to stay away from Meta for very long, right? These guys couldn't run over themselves fast enough to sell the stock all the way down to $88 last year. I knew they were going to come back to this, baby. The valuation was way too compelling. The long-term opportunity was way too compelling. I knew Zuckerberg was going to be able to make some moves as far as firing some folks, and they way overhired, and they could cut some costs. And sure enough, they came running back, and I beat them to the punch. I beat them to the punch in regards to Tesla as well, right? I beat them to the punch in regards to Amazon. Look at these Amazon shares I have. I've been buying Amazon, for a bit here. I got, these shares back from December 22nd, 2022. I got these shares from January 3rd, 2023, November 29th, 2022, March 10th, 2023. I mean, you could just go down the list right there, right? I beat them to the punch. I knew they were going to come back to Amazon. Like, come on. Who are you fooling? You think Wall Street's not going to come back to Amazon? Come on. They all freaking want to own Amazon. Every dip you ever get in Amazon stock is a buy. Every dip you ever get in Meta stock is a buy. Every dip you ever get in Tesla, especially massive dips, are a buy, right? At the end of the day, Wall Street wants to own all these stocks. They're not going to be able to stay away. They can't help themselves from the Metas and the Teslas and the Amazons, right? I looked at Palantir. Look at some of these Palantir shares I got back on November 22nd, 2022, $7.18. I'm kind of mad, a little jealous that I didn't get any shares at $5 and $6 because there was, definitely a time period for Palantir. But at the end of the day, I looked at Palantir's balance sheet. I looked at what their products were. I'm like, Wall Street's going to come flood into this one. And sure enough, as this year's ticked on, they've come flooding more and more and more, right? You've got to beat these guys to the punch. As little money, you've got to be able to see great opportunities in the market for great companies and say, they're coming over here. I'm going to get my money in before they get their money in. It's a swimming pool. I got a great accounting instructor for 3 years in college, okay? And he taught me so many good fundamental things about ways to think about money and the markets and investing and those sorts of things. He always used to have this analogy of going in a pool. And it's like, you're about to throw a party. Get in the pool now because it's going to be really nice. By the time everybody's in there, the pool water starts to get real nasty, okay? And the pool water is going to be gross if you have a big party at your house by the time, the night's over or something. So you want to get in early and out before everybody else gets out. And that's the name of the stock market. You got to beat these guys to these punches. They're coming. They're going to come to wherever the real weakness is, but it takes them a time to get there. And so you got to get it. You got to position before they position. If you position by the time they're already positioning in or have positioned in, you already missed it. You already missed the 40%, 80%, 120%, 160% gains. You'll have already missed it because their buying pressure is ridiculous. When they come in with their buying pressure, things go fast. Look what happened to big tech stocks this year. Wall Street comes in with their buying pressure, and look what happened to those stocks. Had NVIDIA go from 110 to 400. Had Meta go from 88 to 300. Had Tesla go from 100 to 250. Had AMD go from 55 to 110, right? And you can go through the whole list. Had Shopify go from 25 to 50. It happens because the pressure they put on when they come with their money, it's a different sort of money, folks. And the buying pressure is relentless when they start to add their positions. So I got to beat them to that, right? You know, it was interesting. I looked at my worst stocks I held here today. Elf Beauty was my worst stock. It actually went under $100 here today for one of the best companies in the world, I could tell you. Whew. People that are, let's just call it, bullish on Elf that haven't built positions, man, you might have a great next 3 to 6 months to do some business there. Let's just put it that way. Fubo was down today. Palantir, Shopify. What do all three of these stocks have in common? They have in common that these are seen as like my riskiest stocks. It doesn't even mean they're my riskiest stocks. I mean, Elf has ridiculous growth, so sometimes people just look at the valuation like, oh, I don't know if it can command that valuation. Fubo's a money loser. They're attracting ridiculous amounts of subscribers, and they're cutting their losses big time, but it's still seen as a risky stock. Palantir is at infant stage of profitability, so a lot of people still look at that as a risk, and certainly Shopify, people just always look at that stock as a huge kind of beta play, either way underperforming the market or overperforming the market, but that was just kind of fascinating that it just seemed like kind of a risk-off move there. Now, folks, we have things going on in the U.S. government that we've never seen in history. And that's hard to say because I would have thought we would have seen everything by this point in time. No, we have not, okay? The House ousts Kevin McCarthy as Speaker. The first in U.S. history. The House of Representatives on Tuesday ousted Republican Kevin McCarthy as Speaker. The first time in history that the chamber has dethroned its leader in a no-confidence vote. The vote was triggered by blah, blah, blah. Crazy, okay? No, just wait till 2024. You think this is a little crazy, okay? This is nothing. Just wait till 2024. With T-Man, with all his trials that are going to be going on, I'm telling you, politics is going to shake up the market as well over this next year in a major way, okay? It's going to cause some huge levels of volatility because I'm telling you, there's a lot of things that can go crazy ways. Now they got to try to basically replace the House Speaker, and that's going to be a whole situation because right now we're only 40 days away from the next government shutdown. So now they need to find somebody to replace him, get that person in power, and then still make a move. Like, that's a mess. And you know what's funny about this Kevin McCarthy situation is, I looked into him a little bit. He's from freaking California. Like this guy was doomed from day one. What were they thinking? Like, are they kidding me? Like. At the end of the day, you just can't be a Republican from California. It's far too of a kind of like a toxic view of California right now, and kind of like Democrats and all this stuff. That if you're a Republican coming from California, it's just I just feel like people are already going to have like a negative agenda from you, like already in the party. So I was fascinated by that. I mean, you need somebody from like Alabama or like Georgia or I don't know, Louisiana, somebody like that. Okay, that's who you need in that position. It's like, wow, interesting. Okay, Tom Lee expects a violent upside rally before year end. He says violent. Now, you know what scares me about that is back in 2022, he called for what did he call it? A violent February, like a violent, he called it a violent something, in terms of like a rally we're going to have in February 2022, which, by the way, it never happened. We just got absolutely obliterated. So whenever I hear him calling for a violent rally, it definitely scares me. It means, oh man, we probably got another leg lower or two to go in regards to this situation. But, you're going to get a lot of mixed signals right now, right? You get a good jobs report, which the market looks at that as bad because it makes inflation high. You get the government stuff. You get this person saying the market's going to have a great rally into year end, and this person saying the market's going to crash, and all this stuff, okay? At the end of the day, I look at it like this, okay? Imagine we go to the Wynn Buffet. Beautiful, amazing Wynn Buffet, okay? Which, by the way, is pretty damn expensive. It's like $75 there, okay? So you and I, we go to the Wynn Buffet. They go when they seat us. And a waiter comes over, takes our order for drinks, and then we get up and we go to the buffet time. It's time to eat, right? So the way I would look at this is, what are we going to go after? Well, if you've ever been to a buffet before, you know where you're going. You go to the premium meat section. You go want to get a piece of prime rib. If they got any fillets, you want to get a fillet. You're going to the lobster. You're going to the king crab legs. Like, that's where we're going, right? Then we're going to go get some of that expensive stuff. That's why we pay $75 to get in here, right? And so the way we look at this is building your portfolio over this next, several months here, let's just call it, okay? And obviously into the future years as well, but certainly over this next several months. We got a platter, folks, of king crab legs out there and prime rib and all this good stuff that we're going to be able to eat like crazy over this next several months. And so we need to go to where the best opportunities are because it's a big buffet. And there's going to be some things tempting us there that aren't going to be in our best interest, right? Or aren't going to be as good of an opportunity. That bread might look really good, like, man, that looks like the best piece of freaking pretzel bread I've ever seen right there. Probably not the best decision for us to eat that at a buffet, right? And so that's going to be the same thing in the market right now. There's going to be a lot of stocks tempting us from a lot of different angles. And you got to ask yourself, is this really the best place for my money? Because there's a lot of opportunities. In a market of a lot of opportunities, we got to find the king crab legs, we got to find the prime rib to buy. Because that's where the real opportunities are in a market like this. And those stocks are out there and they're plentiful right now. And I'm adding plenty of king crab legs right now in prime rib. And it's going to be like that for a while here, folks, okay? So that's what you need to do out there, all right? And if that made you hungry, I don't apologize. Appreciate y'all joining me as always. Make sure you guys get access to my 2 workshops I put together for you guys. These are absolutely free. I put these together for you guys. Make sure you take advantage of these, okay? The first one is if you are in your first 3 years of investing. It's called my Investing Foundations Workshop. I just put this together last month for you guys. There's a 5 days of videos. It will send you a video every single day. If you want to access that, like I said, it's absolutely free for that. Check out the pinned comment down there. That'll be the first pinned comment. And the second pinned comment down there will be how I find 10X Stocks Workshop. That's a little more if you're a little more of an advanced investor. It's about a 30-minute video in that one. And that should help you out tremendously as well. Okay, make sure you take advantage of those guys. Those are the pinned comment down there. Much love and have a great day.